Hey everyone, welcome back to the channel. Today, we're diving deep into a topic that most people never even hear about. But it's shaping the global economy behind the scenes. First, make sure you've subscribed to the channel nextvault. Have you? All right, let's go. I'm talking about sovereign wealth funds. Massive secretive pools of government money that are quietly buying up the world. From tech stocks to real estate to football clubs, even entire supply chains. You've probably heard about billionaires investing. But what happens when entire nations start acting like trillion-dollar hedge funds? Let's break it down. Chapter 1. What is a sovereign wealth fund? A sovereign wealth fund, often abbreviated as SWF, is essentially a powerful, government-controlled investment vehicle designed to manage and grow a nation's financial surplus. Unlike traditional state reserves that might sit idle in central banks, an SWF actively invests across global markets, from stocks and bonds to infrastructure, startups, and real estate, with the aim of generating long-term wealth for future generations. It's like a country's retirement account, except instead of sitting in a bank collecting dust, it's buying shares in Apple and Google, real estate in New York and London, ports in Africa, startups in Silicon Valley. Where does the money come from? Usually surpluses from oil and gas exports, trade, surpluses from manufacturing giants like China, profits from privatized state-owned companies or central bank currency reserves that aren't being spent. The concept is pretty straightforward. Instead of spending all that money the moment it comes in, the government takes a smarter route. It sets the cash aside and invests it carefully, building up a financial safety net that can support the country decades into the future. It's about turning short-term wealth into long-term security. And make no mistake, this isn't small change. Today, there are over 170 sovereign wealth funds, managing more than $11 trillion. That's more than the GDP of Germany, India, and Canada combined. Chapter 2, where it all began. Let's rewind to 1953. Back in 1953, Kuwait was riding high on a wave of oil wealth. But instead of spending it all, the government made a groundbreaking move. It established the Kuwait Investment Authority, creating what would become the world's very first sovereign wealth fund. It was a bold and visionary step, using oil profits not just for the present, but to build a financial legacy for future generations. Why? Because they knew the oil wouldn't last forever. So they started planning for a future beyond black gold. Then came Norway in the 1990s. They launched the Government Pension Fund Global, now the largest SWF in the world. It's worth over $1.5 trillion and owns slices of over 9,000 companies globally. Here's a stat that will blow your mind. If you spend $100 in Europe, odds are a few cents go straight into Norway's pension fund. Then came Singapore, a small island nation with big ambitions. Instead of sitting back, they launched not one, but two sovereign wealth funds, Temasek Holdings and GIC, the Government of Singapore Investment Corporation. These weren't just saving vehicles. They were engines of innovation. Temasek dove deep into tech and emerging markets, while GIC quietly became one of the world's most influential institutional investors. Together, they positioned Singapore as a dominant force in Asia's financial future. What started as a cautious financial hedge became a geopolitical weapon. Chapter 3, what they buy. Here's where it gets wild. These funds are not just buying index funds. They're buying big tech, Temasek owns parts of Nvidia, Alibaba, Stripe, even biotech unicorns. Real estate. Qatar's fund owns London's Shard, Harrods, and iconic hotels across the globe. Sports. Saudi Arabia's PIF bought Newcastle United and is building Live Golf to rival the PGA. Infrastructure. China's CIC owns ports in Greece, toll roads in France, and utilities in Africa. Global stocks. Norway owns shares in Apple, Amazon, Microsoft, Nestlé, and even Tesla. These are not speculative plays, they're strategic moves. They provide stable returns and influence. They buy soft power. Chapter 4. Why it matters. So why should you care? Because SWFs aren't just investing in companies, they're reshaping global capitalism. They're influencing by corporate board decisions, acquisitions and mergers, global tech trends, and even government policy. Imagine this. Temasek, Singapore's powerful investment arm, decides to pull out of fossil fuels entirely. They divest from oil giants, coal operations, and traditional energy, and instead shift billions into clean energy tech. Solar farms, wind turbines, battery storage, hydrogen startups. Suddenly, the entire green energy sector gets a massive shot of adrenaline. Not from a billionaire or a bank, but from a government-backed fund. Boom. The entire energy sector shifts. If PF backs a new biotech startup, it suddenly has global exposure and access to Middle Eastern markets. But here's where it gets controversial. Should countries be allowed to own parts of your economy? What if China controls your ports? Or Qatar owns your water supply? Are these just smart investments or geopolitical Trojan horses? Chapter 5, a case study, Saudi Arabia's PIF. Let's zoom in. The Public Investment Fund, or PIF, of Saudi Arabia isn't just another sovereign wealth fund. It's arguably the boldest and most ambitious investment vehicle ever created by a nation. Backed by the immense oil revenues of the kingdom, this fund has become the financial engine powering Saudi Arabia's transformation from a petrostate into a global economic force. Under the leadership of Crown Prince Mohammed bin Salman, the PIF has been tasked with nothing less than reshaping the future of the entire Saudi economy, and by extension, influencing global markets. With hundreds of billions of dollars at its disposal and a mandate to diversify the kingdom away from oil, the PIF is making massive, high-stakes bets on technology, tourism, sports, renewable energy, and futuristic urban projects. It's not just investing, it's rewriting the country's identity. Under Crown Prince Mohammed bin Salman, the fund is powering Vision 2030, a plan to shift Saudi Arabia away from oil. Here's what PIF is doing. Building Eniom, a $500 billion smart megacity in the desert. Investing in Lucid Motors, Uber, and SoftBank's Vision Fund. Buying into gaming, renewable energy, tourism, and e-commerce. Launching entertainment districts to compete with Dubai and Las Vegas. PIF doesn't just want financial returns. It wants national transformation. This is more than investing. This is rebranding a country. Chapter 6. The quiet power of SWFs. Here's what makes SWFs different from hedge funds or pension plans. They don't answer to investors or shareholders. They don't need to chase short-term returns. They move slowly, strategically, and often invisibly. Most people never even realize when a sovereign fund buys into their favorite brand. SWFs rarely make headlines, but they're reshaping the market. Some financial analysts and global economists are beginning to paint a striking picture of the future. one where the balance of economic power shifts dramatically. They suggest that within the next 2 decades, we may witness a historic inversion. The world's most powerful shareholders won't be banks, tech giants, or multinational conglomerates. Instead, the most dominant forces in the global economy could be entire nations themselves, operating through sovereign wealth funds. Picture this: governments, not private firms, quietly holding the controlling stakes in energy companies, space technology, biotechnology labs, or the next generation of AI platforms. These funds, backed by state authority and virtually unlimited time horizons, could soon outsize even the biggest corporations, not just in capital, but in strategic influence. It's not just speculation. The trend is already in motion, and that changes everything. Chapter 7. The challenge is ahead, but it's not all smooth sailing. SWFs face major challenges: lack of transparency, political interference, backlash in foreign markets, ethical dilemmas in industries like surveillance, fossil fuels, or defense. Not every country is welcoming sovereign wealth funds with open arms. In fact, nations like the United States, Australia, and the United Kingdom have already begun drawing clear red lines. They've introduced policies and legal frameworks that restrict or outright block SWFs from owning significant stakes in what they define as critical industries. That means sectors like defense, telecommunications, energy infrastructure, and advanced technology are increasingly off-limits, especially when foreign state-backed investors come knocking. Why the caution? Because while these funds may act like financial investors, they're ultimately arms of foreign governments. And for many democracies, the idea of another nation owning a piece of their national security, even indirectly, raises serious concerns. It's not just about money, it's about sovereignty, control, and strategic vulnerability. As a result, regulatory watchdogs are now keeping a close eye on where sovereign wealth flows and where it's no longer allowed to go. And here's a paradox. Many SWFs are funded by oil profits, yet they're investing in a net zero world. So funds are now pivoting into climate tech, biotech, and healthcare AI, and automation, space exploration, clean infrastructure. They want to be on the right side of history and profit. Chapter 8. The next frontier. The next generation of SWFs is already emerging. Nigeria, Angola, and Gabon are building oil-funded SWFs. India is exploring how to channel its trade surplus into global assets. Brazil, Chile, and Peru may follow as resource-rich economies rise. These new funds will power climate transitions, infrastructure in emerging markets, global startup ecosystems. In the coming decades, sovereign wealth funds aren't just expected to grow, they're expected to quietly dominate. These funds, backed by entire nations, will act as silent shareholders in the global economy. They won't need to make headlines or flashy announcements. They'll simply write massive checks, take board seats, and steer industries from behind the scenes. And as they allocate billions, even trillions, into specific sectors, they'll help determine the winners and losers of the next era. Imagine a fund shifting billions out of fossil fuels and into green hydrogen, or pulling back from social media platforms while doubling down on biotech. That kind of capital doesn't just follow trends, it creates them. These funds will influence which technologies get built, which companies scale, and which entire industries fade into irrelevance, or without ever making a sound. That's the real power of sovereign wealth. Quiet, deliberate influence, with the future of global business hanging in the balance. So next time you hear that a company just got $1 billion investment, ask yourself, was it a venture capitalist, a billionaire, or an entire country? Sovereign wealth funds aren't just financial tools. They're instruments of global power. Let me know in the comments. Should countries be allowed to invest this way? Is it a smart national strategy or quiet domination? Don't forget to like, subscribe, and hit that bell for more deep dives into money, power, and global strategy. Thanks for watching, and I'll see you in the next one.